over 140 US financial institutions already connected, which, given they've only launched for a couple of months, is remarkable progress. It's the new real-time payment rail for the United States of America. It's hugely exciting. It's high innovation though, so it's going to be a linear and progressive journey. It's something that's going to take some time to really find the use cases and the traction. But in terms of first release, I don't think that the Fed could have hoped for anything better. And in fact, I was at Chicago about 3 weeks ago at the symposium, which is a closed conference that they run there with very senior people from the Fed and really smart people around the program. It represents a game-changing initiative for payments in the United States. So we're really excited to be part of it. At Volt, we're building the world's first global real-time payments network by harmonizing global account-to-account real-time payment systems. So open banking in Europe, UPI in India, PayNow in Singapore, FedNow in the US. You've got the clearinghouse RTP network here as well. We just fundamentally believe that real-time is the future of how money moves. And if that's the case, we're positioned strongly to be able to deliver a global network of real-time payment systems. And so the United States is the world's largest economy, biggest businesses, brightest minds are here. They're a little bit behind the curve, it's fair to say, with respect to on the global stage where other economies and other markets are at. I think that can be an advantage though, right? Because they can see some of the mistakes of earlier players before them. We at Volt, we've recently just closed a funding round, our Series B, $60 million raise. We're a team of about 220 people today. And expansion to the United States is really on our agenda over the next few months. So we're deep in conversations with the respective partners about our launch products in the United States, and we're looking to orchestrate FedNow with the clearinghouse RTP with ACH to deliver real-time payments for this market. RTP's been around for 5 or 6 years. The clearinghouse is co-owned by the 20 largest banks or so in the US. They've opened up RTP for very limited use case at the moment. So push payments only, bill payments. So the biggest use cases there are salary disbursements for the gig economy or for institutions that are paying their staff, can pay them now in real time. And also, as I mentioned earlier, bill payments. One of the frustrations, I suppose, is push payments are great for Wall Street. They're not so good for Main Street, right? Shoppers and merchants want access to pool payment mechanisms. And what I mean by that is the ability for a merchant to request for payment or to pull funds out of a shopper's bank account with their consent. That isn't available today on either FedNow or RTP. The standards have been written for FedNow. I believe the same for RTP, although don't quote me on that. But it hasn't been mandated on the banks. And the banks do have a disincentive to innovate in this space because they make a lot of money out of card transactions and interchange. So that's one of the challenges that I think the FedNow and the RTP teams have got. They want FedNow to become Main Street, but there is a commercial conflict of interest there. So how the regulators and the bodies deal with that will be interesting.